Yo, what's up everyone? It's your boy Looney. Today I'm going to break down how I make weekly income selling options. And don't worry, this is going to be very beginner friendly. It's going to be no hype, no risky YOLO trades, and just consistent small wins that stack up. Before we get into it, quick shout out to the Discord. It is free to join, and then I also have premium perks, which gets you access to trade alerts, one-on-one coaching. There's a course, I do giveaways. You can check it out. All links will be in the description. So let's start with selling puts. And I sell cash secured puts on stocks I already like. So these are mostly stocks like Riot. These are crypto mining plays, so Riot and Mara. And then I pick strike prices that I'm actually okay owning the stock at. And this is usually below current market price and my average cost. If the stock decides to drop and I get assigned, this is actually a good thing because I wanted the shares anyway. If not, I keep the premium, and then that's where the weekly cash flow comes in. So right now, Riot is at 8.52, and I opened this trade a little bit ago, so we don't know if this is actually a good trade or not until it is in the future. So what I like to do is go to trade options, and I go to 1 to 6 weeks out and then sell put. And I like to do that delta that's like the 0.2 to 0.3, and that's exactly what $7.5 put. You always want to sell options that are out of the money. And that's what this is below this bar or the current price for selling puts. And like I said, if I get assigned to that 7.5, that's actually a good thing because right now the stock is trading at 8.52, and we truly don't know if this stock is going to drop or not. So you're at least being prepared that if it does drop, you will be okay with buying it. And if it doesn't drop to that price, you get the premium. So that's where selling options is very good because you could wait and just not buy until it drops to a price that you like, or you could sell options where you can collect premium just for waiting, just for selling your time. And yeah, that's one that I opened, and let's just see what the actual premium was. So if I go to the 7.5 put, and I got $22. So that's a really good return. If this stock doesn't go to 7.5, I get that $22 or I realize that gain of $22 and I can make a similar trade. And that's what I do. I reinvest these. So you do need, let's see how much you actually need for that kind of play. It's like 800, or not 800, around 600 and something. Right here it says you need 734 to just open this trade, which in all actuality, it is not that much. I know for some, they're just trying to start with $100, but I wouldn't recommend investing until you actually get 1,000. And that's what you need for this. You need 734 just to do this trade. Now, once I own the shares of stock, I move into covered calls. And that is a similar strategy. So I'll sell calls above my average cost, and ideally on green days when premiums are a bit higher. And again, out of the money. This lets my shares earn money every week, even if the price goes sideways. Right now I'm doing it on SoFi, and I do plan to do the same on other stocks as well once I hit 100 shares. So let's pull up that SoFi. Let's see where it is. So I have 4 going on right now, 4 contracts of SoFi because I own 400 shares. So I can do 4 contracts. And this is out of the money. It's above it's above the stock price right now. And it's also above my average cost basis. So I bought it for $11.29 and it's trading at $13.7, and then I sell a call at $14. So basically, if the stock goes above $14, I'll be forced to sell my shares of SoFi at $14. So you do miss out on a few gains, but you can either roll it or just sell it for a profit. It's really not a bad idea to sell for a profit. And additionally, it's not only $14. It's really, if we go to this, it's $14.42. And that's where this premium comes in, is $136. I did a roll, so it's a little more confusing. But that premium is what helps with this strategy. So if the stock goes sideways, I get that premium of $136. And if the stock goes above it, I still get that premium, but I just miss out on gains. Let's say if I went to $20, I do miss out on those gains. And again, same kind of strategy. I try to do this on red days or green days, but you would just do that 1 to 6 weeks out, sell call, and this time out of the money is above the share price. So again, 20 to 30 delta. So this $15 call would be perfect. I did 14, and that's because I rolled it. So we'll see how it actually ends up. It should be a lot better when market opens because the stock has dropped and we're seeing the market pull back. But yeah, you could open this $15 call and you need 100 shares. So again, if you own the shares and then you sell this call, you'll be forced to sell your shares at $15 if it goes past that. But really, you don't lose money if that happens. The only way to lose money is if the stock drops and if it drops significantly. But even still, you get that sell call to hedge and you could sell more puts and you could basically work with it. And then every dollar that I do make from premiums, whether it's $20 or $100 or $60, I reinvest those. I use it to either buy more shares, sell more puts, or DCA into long-term plays like Bitcoin or Hood. And it's all about stacking small wins, building buying power, and scaling up positions. And that's how I make weekly income: low risk, consistent, and patient. Like, subscribe, and drop a comment if you want me to break down a real trade. Peace.